Welcome to this live queue with Formpipe. My name is Fredrik Nilsson and I'm an equity analyst at Redeye. After Christian's presentation, I will host a Q&A session and I will highlight the possibility to ask questions below the stream on our web page. But now I will leave over to the CEO of Formpipe, Christian Sundin. You're welcome.
Thank you, Fredrik, and thanks everyone for joining to this session. As Fredrik said, I'm Christian Sundin, CEO of Formpipe, and this session will be entirely about the Q3 report that we published this morning. So I will jump right into it. A few highlights. We are presenting a quarterly report with a 10% growth compared to last year. We see that our growth strategy, investing in resources on that, is paying off. And we see strong demand both in the private sector and in the public sector. We do a 9 million ACV, a strong ACV number, and our investment in increased resources in order to support our partner network has really paid off and brought us to a new level of ACV in second consecutive quarter with strong ACV numbers. And we can clearly see the effect of us putting in that effort. On growth, it's spearheaded or private leads the way with an 18% growth, mainly from the product Lasernet bundled with Autoform GM. However, we still see untapped potential in even higher growth. For those who've been following other software companies like Microsoft, and Lasernet is complementing Microsoft Dynamics. Microsoft's latest report was 30% growth of the Dynamics and actually almost 50% growth in terms of Dynamics in cloud. And it's really where we have a competitive edge is to support Microsoft Dynamics in the cloud. So we will of course pursue that possibility and go for even higher growth going forward in terms of Lasernet and in the private sector. Coming to the quarter and numbers, as I said, 10% growth from last year, or 10 million in growth year on year for the quarter, and this is primarily driven by recurring revenue and increased 7 million, and SaaS is the strong driver for growth of recurring revenue here, with the growth of 24% compared to last year's third quarter. License, the traditional license, is declining over time. However, we're almost on the same level as last year on that. There are still customers that really want to buy traditional license. And of course, we offer that, even though that's not our ambition to grow the traditional license. Delivery revenue is growing, a lot of from public sector Denmark actually, and is with a strong momentum in the market. And the Landbrugsstyrelsen deal we announced Q2 has made us gain some momentum there, but there's also there is a strong demand for our services and products in the general market, both for case and document management and grants. Looking on the cost side, we continue our recruitment, and we will continue to recruit, and we will be even more people coming quarters. So that is the path we're on, and that is to support the growth journey we're on. We've added 5 employees in this quarter and are now on 276 people in total. So staff cost is up. However, Q3 is a vacation period, and holiday pay reserves are released, and thereby the compared to recent quarters, the cost side is down there. But that, of course, will come back up again in more normal quarter, less affected by vacations. The other cost lines are largely in line with previous quarters, and for that reason, with the summer vacation and so forth, and as big portion of our revenue is recurring revenue, the Q3 looks fairly strong. Actually, 17 million in EBIT, or a margin of 16%. So that is on the cost side. Going on, as I said, we will continue to recruit and onboard and search and find and really attract even more people to support our growth journey. And we're following that path, and we will continue to do so. Looking on the recurring revenue and the growth of recurring revenue, where about 60% of our revenue is recurring. We've had a long journey of growing our recurring revenue. We've actually had a 10% growth year by year in many years now, and we will continue to grow that in a strong pace. Today, it covers more than 80% of our fixed cost. That gives stability and lowers risk in our business. Of course, we've said that many times, but it's worthwhile reminding about. And we have a resilience to things like COVID in terms of recurring revenue and a very stable and growing recurring revenue base. However, the investment we're doing right now, and we will continue to do an increase in growth, has added on costs and thereby disrupted the line we were on to cover even higher degree than 80% of the total fixed cost with our recurring revenue. But this is all according to plan, of course. Going in some detail on the ACV, 9.4 million in ACV on the quarter, and 9 million of that is SaaS. And actually, it is also, we've taken away this quarter, but FX, the revaluation of ARR, would actually, we included that, it would actually have been 11 million in ACV this quarter. However, we think that the revaluation of the full ARR every quarter is not really an accomplishment for this quarter. So we pushed the FX revaluation to ARR instead of having it as a factor in the ACV calculation. And thereby the most true ACV we have this is the 9.4 million. A really strong ACV and private, and the efforts we're doing and the resource increase we have to support our partner network around the globe actually really pays off. We see 6.3 million of the ACV here is from private SaaS growth. So we have an outgoing ARR on 291 this quarter, which is a growth of 12% compared to last year's end of Q3. So a really strong ACV and ARR quarter to be it's a strong quarter in terms of sales and the sales we want to pursue. And this picture, I think, tells the story quite well. You see the going back from an ARR going into 2017 on just about 10 million, and now we're ending Q3 here in 2021 on 78 million. But of course, you see also the new level of ACV that has been introduced with the resource and the investment in resources we've done during 2021. Starting with 5 million in Q1 and then 2 consecutive quarters with an ACV of 9 million are strong numbers. We've said this before, we are in a year of investment and we will continue to invest in growth, and we will add on even more people to our business, and we see that there's a strong market demand both in private sector and in public sector. So we're executing on this strategy, and I think it's fair to say that we see clear evidence in that it's working at the moment. So I also believe it's fair to say that the financial targets we published early this year looks like I'm not really worried that we will meet these financial targets that we've published. We're clearly on the right path with many things that's going on right now within Formpipe. So 10% annual growth for this period. We're on that way. We're already on 10% year on year on the Q3. Share of revenue in recurring revenue. We clearly see that the revenue we're growing the fastest is the SaaS revenue, is recurring revenue, and we will pursue that, of course. The EBIT will take some time to recover about 20% EBIT but recurring revenue business and is very scalable, so we'll fix that as well over time. And with the scalable business and with recurring revenue, it's also cash generating, and thereby the dividend policy should be possible for us to or we will live up to that for sure. So all in all, a quarter that we're happy with, and we believe that there's even more gears to shift up to going forward in the market. So that was all for me for this time, and I hope we have a lot of questions. Thank you.
Thank you, Christian. Yes, we have some questions, and I think we have to start with ACV. As you mentioned, it's the second quarter in a row where the numbers is much stronger than we've seen before, and it seems like your investments in Lasernet are really paying off. Could you elaborate a bit more? I mean, what's the reason behind this significant increase, and do you think it's sustainable?
I do believe it's sustainable. There will come weaker quarters for sure. 2 times 9 million here, that is really strong. There will be weaker quarters coming in the future, but there will also be stronger quarters coming in the future. And as you say, it's the private sector that leads the way. It is the investment in more partner support resources. It is also thanks to the acquisition we did last summer of EFS, where we got a lot of capacity, competence, and bandwidth to support our partners better. We also improved our partner relation with Temenos at that time. So this is both driven by Microsoft Dynamics and their success in the market, where, as I said, they're growing with 30%, the Dynamics suite, and they're actually growing Dynamics in the cloud with 50% in Microsoft. And we're piggybacking on that success, or we're helping Dynamics to be even better. So those two tracks are the two tracks we're pursuing, and we're increasing the bandwidth of doing that and getting more feet on the ground to help the partners and add on new partners around the globe is the main reason for this. And of course, when we see the traction we're doing right now, we will continue to increase resources to help Temenos and Microsoft to shine in their and their partners to shine in their deliveries.
Okay, and as you mentioned, Microsoft, the relevant Microsoft products has an even stronger growth. So what can you do in order to capture that growth even better going forward?
Yeah, it's all about execution from our side, of course, and its capabilities. It's how much competence and resources we pitch in. I mean, we're a small player. Microsoft Dynamics is a huge market, and there's not a lack of market that will stop us. It is up to us to go for this and do more of what we do every day with more resources. That's the way forward.
Okay. Once again, I want to highlight the possibility to ask questions on our web page, and I will take one question from the web right now. And the question is, Formpipe's revenue has grown 6% over the last 4 years, which is extremely low, although earnings have improved. How do you explain the low revenue growth? It can't only depend on the transition to software as a service, since that transition began 10 years ago.
Well, it didn't really begin 10 years ago in our case. We focused only on growing recurring revenue, not and the traditional license has, over the period from 2017, trailed down from levels, yearly levels of just below 80 million a year to now on like 30 million a year. So that's 50 million out of top line in the transition to SaaS. On top of that, we have deliberately not gone for driving delivery revenue. We have pushed delivery revenue to partners, That has also reduced the top line. So in terms of recurring revenue, we have, as pointed out on one of the initial slides, we've grown that with plus 10% year by year since 2014. And this year we have during this time we've also increased the margins. So we made a mix of growing recurring revenue with 10% a year, and on top of that, improving our margins gradually year by year over that time frame. At the beginning of this year, we launched a new strategy because we executed very well on the strategy of improving margins and growing recurring revenue. Now we're going for faster growth, and that is what we're also clearly proven that we will be able to execute on, just as we did with the prior strategy we had. So I'm very confident with our new strategy and our new growth targets, and thereby the 10% annual growth, I'm confident with.
Okay. You mentioned in the report that it's currently hard to find talent. How will you handle that? Are you willing to raise your employee expenses, or are there any other things that you can do to solve that issue?
I think we're doing what everyone does, trying to be as good employer as possible, to have market terms on and following, of course, what's happening in the world right now with new ways of working and making it possible for people to have a good work-life balance. And then we're working with trainee programs, trying to get people right out of school. All the things that everyone else is doing, we are trying to be better. And we are finding a lot of new talent. We're finding good competence. But also there are people, other competitors are also doing a lot on that. So we also get people that leaves for more attractive offers outside of Formpipe. So it is. I don't think that will go away, and it's sort of a how the market looks right now, where it's a quite hot market for the employees within tech anyway. Yeah.
I see. Okay. We got some additional questions from the web, and the first one is, what's your strategy regarding further acquisitions going forward?
Yeah, we clearly have an active M&A agenda. We have two tracks that we're really pursuing. We believe we will benefit from adding more geographies to our public sector. So we would very much like to buy similar companies as Formpipe, but in EU, supporting the digitalization of EU for the public sector. So adding repositories there that we can then upsell our add-on modules and so forth on those customer base, and get scalability in R&D and offering and actually help the customers in public sector with even more e-services and products on top of what we're doing today. The other track would be to find in private sector would be to find a similar add-on as Lasernet to the Dynamics suite, for example. When you are implementing a Dynamics system, the system integrator most likely they bring on Lasernet, but they perhaps also bring up on and purchase to payment product or something for HR or travel expenses or something like that. We would very much like to join forces with someone that has a partner model of selling add-on modules to the Dynamics platform or other ERP systems. So those are the two main tracks that we're pursuing. We are open for other ideas that complement our offering to both public and private sector as well. So we're evaluating that. But we have an active M&A agenda on top of the growth we see here organically. So.
Okay, one follow-up on that. Regarding the public sector possibilities, are there any countries that is extra interesting?
No, I would say Europe in general, and preferably EU countries. We think we have a better overlap for countries in the EU, but Northern European countries and I mean, Denmark is a clear front runner in digitalization. Sweden is not far behind, and there is a lot of interesting countries around Europe that still have room for improvement. I mean, Angela Merkel got quite a lot of criticism for not focusing on digitalization of Germany during her years as chancellor. There's quite a lot of untapped potential to improve the digitalization for the citizens in Germany. So from that perspective, there's other countries that are very interesting as well, and there's a lot of learnings from the Nordics in terms of self-services for citizens and so forth to make public sector more efficient in terms of digitalization. And we can really help out there. So our vision is to become the European leader of digitalization of public sector.
Okay. Another question from the web. What's the competitive landscape in Sweden like?
Do you mean on public or private sector?
Yeah, I suppose the question is about the public sector.
Yeah, there's a handful of good competition, Nordic local competition. The thresholds to get into public sector on a European country is high, because even though EU has a lot of things in common, there is also differences between in regulatory difference, laws and so forth, also between Denmark and Sweden. The big global giants, such as the guys over in Redmond, they don't really. It's not a big pond enough for them to adjust systems to fit a municipality in the middle of Sweden. So there are local players, and there's a handful of them that are competent enough to actually help the customers out there, and we're one of them.
Okay. One related question from me then. I mean, your private sector as well as the Danish public sector are doing well. However, if we're looking at your public Sweden segment, there are a few competitors that have grown slightly higher than you, or at least one competitor. And what can you do to capture more of the growth in the Swedish public market?
Yeah, a lot of, we of course see that potential as well, and we're pursuing it, and it comes down to resources to a large extent, and also business model. We're coming from a true partner delivery business model, and a lot of the growth in the public sector is actually on services. It could be services in terms of software as a service, it's add-on modules and so forth, but it's always connected to some sort of delivery. And that is where the main part of the growth is, both in terms of tenders and evaluation models in the tenders, but we see big untapped potential in helping our customers actually using the system they bought from us with even more process and make their administration much more efficient. So that comes down to more feet on the ground also in the public sector. And that is how we do it in Denmark. And as you see, we grow well there. And we will do the same thing in Sweden. So we will go for helping our customers in the public sector, Sweden, where we are the market leaders and have very, very many of the customers out there with more things. And that will support our growth journey also in the public sector, Sweden. But then it comes down to resources and recruitment and onboarding. And these are complicated systems. It takes time. But we're on that track. We're on that track and we're pursuing it.
Okay. Long term, would it make sense to spin off your private segment?
Well, yeah, it could. I mean, I think with the size we're in, both public and private are still alone quite small companies. There's not a lot of overlap, but there's some overlap, and it's product development, it's joint marketing and systems. But there's a lot of synergies between especially on the cost side and buying power side. But there's not a lot of synergies on the cross sales side. So yeah, that could be something that it slightly perhaps could attract slightly different investors, where the public sector is a growing business, but perhaps not as fast growing as the private sector, but very much more profitable and cash generating. So perhaps these two organisms would attract different investors, and that could be a argument for that. However, I do believe we in order to carry the weight of it, we should probably double the size on both of them prior to start thinking about that. But that's just my view.
Okay, makes sense. So during the pandemic, you've mentioned that some public customers are harder to interact with and harder to close deals with due to the restrictions. However, most of the restrictions are now gone, or basically everything in your key public markets. What's the situation like right now?
Yeah, as you said, it's possible to meet, but the world has also changed. There's a lot of more Teams meeting, and there's an adoption to digital meeting rather than physical meetings and so forth. But that won't stop us at the moment, I would say. But on the other hand, there's also fierce competition on price in terms of new tenders, especially on the product side. So that is a market reality we have. But as I said, we see strong demand from our current customer base, and it's yet again up to us to execute on it. So I will not blame the market for us not producing stronger growth numbers in the public sector, Sweden.
Okay. Once again, I want to highlight the possibility to ask questions on our web page. So we talked about the competitive landscape in public Sweden. Could you give us an update on the competitive landscape for your LaserNet and Autoform products? Anything new in that space?
Well, new, no, not really. I mean, there are similar products as LaserNet with Autoform out there. So that there are competition. Mainly on other ERP systems than Dynamics and the banking system Temenos, where we have cutting-edge products. There's of course the software that is as good as ours on Oracle, on SAP, and so forth. However, those other products are not our main competition. Our main competition is system integrators or end customers that do not see that it's better to have a product there instead of building it with building documents with thousands of consultancy hours in coding and configuration. That is the main competition. That is consultancy hours, building it right out of the ERP systems instead of using an add-on component such as LaserNet. And that has not changed, and that has been the story for more or less forever. So in terms of competition, we have a very strong position on the Dynamics suite and the Temenos suite on products. However, there's still, as I say, a lot of untapped potential for us to pursue there.
Okay. You mentioned in the report that the partners are doing more and more LaserNet deals. Could you give us some approximation about the magnitude of that shift? I mean, how how much have you improved that numbers following the EFS acquisition?
Well, with the growth we're having, we would have needed more or less to over a year to double our delivery capacity if we would have not been able to shift those deliveries to partners. And we have two types of partners. We have the true sales or referral partners, as we call them, the ones who do not want to make delivery of LaserNet. They want to make delivery of Dynamics. And then they say, yeah, Formpipe, go fix this problem with installing LaserNet. Those partners are one type of partners. And instead of us doing that work, we now have delivery partners that do that work and really want to do that work and do that consultancy. So we've built up capacity of delivery to support the referral partners. So that's what we've done. But the magnitude is, yes, with the pace we're selling right now, we would have needed to scale up our delivery capacity significantly. We have not. We've pushed that to partners instead. And of course, that we could have grown even faster by adding those delivery capacity and have that delivery revenue in our business model. But we truly believe we scale better by doing it this way instead, and focus on sales on new products and more SaaS instead of mixing it with a lot of deliveries. So the delivery revenue you see in the private sector is mainly coming from us giving support to partners in their projects rather than we have our own projects.
Okay, that's all for today. Thank you very much, Christian.
Thank you, Fredrik. Thanks everyone out there. Reach out to me if you have follow-up questions. So thanks.